Yeah, so wouldn't everyone think that it would be somewhat likely that the companies would, if their money was stuck, that they would get it back at some point?
Well, I think that, yeah, I think they believed they were going to get it back at some point, but I'm a startup and I need the money that's in that savings account every week to pay my guys and my payroll, so time is my enemy, so getting money at some point could have taken a while.
Gotcha. In that case, is this a little like the lawyers from that that chase the lottery owners to buy their mega jackpots? They know the lottery owner will get their money, but it's only one payment per every 20 years or so?
Yeah,
every year per 20 years?
You're bringing something up. It is like that. Actually, it's a great point, Kellyanne. You see, she's asking about, you see the billboard. Did you win the lottery? Call us and you can get part of your jackpot now. Well, guess what? If you won $5 million in the lottery, I'd be willing to bet what they're going to offer you is about $3 million, because they're going to get a loan for the $3 million that they give to you, and they got to pay the interest on that, but they're going to be waiting for the state to give them the monthly payments. So it's very much the similar thing, but in this case, the Jeffries guys were just sharks in much nicer suits and Richard Mille watches. So that was spinning around out there, and I'm like, wow, how quickly the sharks circle even among each other. So when we get to Sunday, we would see that that stuff didn't happen because some assurances came out. So first thing Sunday, we're all up early, at least I was, and the Sunday news show, there's Janet Yellen saying there's not going to be a bailout. So the first concern was kind of political, and in terms of Wall Street, they didn't want people to think that the US taxpayers were going to pay for yet another conflagration and set of sins by the financial services industry. She also said the Federal Reserve was discussing how to put together a fund to backstop the banks. And she said, quote, protecting depositors rather than bailing out investors. So she's on Face the Nation Sunday news show. And so that was very interesting. We're starting to hear that. And we're also hearing that the Bank of London is considering Silicon Valley Bank UK. So there's already been conversations on Saturday to London saying, hey, Silicon Valley Bank London, regulators, we're willing to sell this thing. We're in control now. What's going on? Are you interested? And then the Bank of London comes out and says, look, this is a unique opportunity to ensure the UK is more diversified banking sector while allowing continuity of service to the Silicon Valley Bank UK client base. We see this as strategic. So the Bank of London is out there, and by the way, this is a small division, but this is exactly what Janet Yellen and the regulators wanted. All the various parts of Silicon Valley Bank to be bought and in the hands of new responsible parents. So that was the good news. The bad news is around 6 o'clock on Sunday night, PNC, a significant U.S. bank, said, no, right now we're not going to buy SVB. And there was some disappointment that was expressed because apparently Janet Yellen and others thought that PNC or one or two banks that were similar to PNC would be good candidates to buy it and then grow themselves a little bigger. There was also a note that was out there that JP Morgan's bankers had worked 24-hour shifts and were reaching out to some of the startups to say, do you need a bank? Do you need to make payroll next week? We've got emergency procedures we can set up for you. So JP Morgan was being the entrepreneur that we know they are, and they're running out there saying, hey, number one, we can get new customers, and number two, what a way to get a new customer other than helping them at an hour of desperate need. So JP Morgan was out there doing good things. And Jeffries, if that story turns out to be 100% true, was looking to help them, but also make a very serious buck. Now, JP Morgan's trying to make a buck too, but they're not trying to do a distressed debt purchase where they really, you have to take a haircut on your debt to get your money today. JP Morgan is saying, hey, you need a bank, and you need a bank you depend on. I'm one of the big four, so here, let's get together. And apparently JP Morgan bankers are working 24 hours talking to people trying to help them. So you sort of have the yin and the yang of the financial services industry, a shark trying to help you and then a shark trying to help you, but he's going to take a bite out of you. So the government is also out there saying, hey, it's not going to be a bailout, not going to be a bailout, not going to be a bailout. And finally, around 7 o'clock on Sunday night, here's what we heard. We heard about this new thing called BTFP. the Bank Term Funding Program. So the federal government said, hey, we have about $100 billion that sits in this special fund called the Exchange Stabilization Fund. So in other words, not printing new money, not a loan from the US government, and we're going to take $25 billion of that to make what we call a backstop. So we're going to help the depositors get money of their balance in Silicon Valley Bank this week so they can transfer to new banks, continue business, and they don't have hardship. More than anything else, it also told the public, hang on, the federal government now has something in place, so if your bank has trouble, you will be able to get what's in your deposit. Now, they were also very careful to say, a White House representative was on CNBC last night, and they said, by the way, the equity holders and the bond holders, they're wiped out. We're not here to make investors hold. We're here with this product to help the depositors and the little companies that had their money in there. They have to make payroll and run their company to make them whole. That's what this is all about. And so to me, it is kind of a little bit of a bailout, but they were saying, no, it's really a backstop because we hope by the end of this, through the sale of SVB and some other things going on, that at the end of the day, none of the $25 billion needs to be used, that the water levels out and people are getting deposits from the sale of SVB and other things that we're doing. And at the end of the day, we don't have to use any of this on a permanent basis to give the depositors. Well, we'll see. So everything last night, a thing called the futures went into the green, meaning the futures is what we expect the market to open. And the US market futures Sunday night last night went into green, which meant everybody was breathing a sigh of relief because they was worried that the banking sector would take the whole market and regional banks down. Well, it turns out that that didn't happen at the open, but we had a little bit of a blip at the open. But Monday opened up with HBC, with support from the Bank of England, actually buying Silicon Valley Bank UK for about $1.2 billion. Also open with this. Goldman running to the microphone, and their economists pop up and say, yeah, we no longer expect the Fed next week on March 22nd to raise rates 0.5 point in the US. And we think there's probably, they said, about a 75% chance, it's just our opinion, we're economists, that it's only 0.25 point. Other people were saying maybe the Fed doesn't raise at all. Now, why? What would that do? Well, the Fed is trying to combat inflation, and there have been signs that inflation is still a very healthy 6.5% in the United States. So the Fed was looking at raising interest rates to make the US dollar more value and to put pressure and to cool off the economy a little bit so that inflation would go down and give the working class and middle class especially a break. If the Fed, because of uncertainty in the banking industry, that raising a rate could make all of this unsettling and stocks going down and trouble in the banking industry worse, he's forced to pull back on that and say, well, I'm trying to tame inflation, but I can't throw gasoline on the fire that's now burning in the financial sector, in the banking sector. So that we have to all watch that and see what goes on. If they start moving monetary policy down because of uncertainty in the banking sector, well, that could lead to other things again, including excess housing supply and housing values dropping even faster. So this is a delicate time we're living in, and it's a time for prudence and caution.